Pierre Berger. I am a partner at DLA Piper. DLA Piper is an international law firm. I am a partner in the Belgium office responsible for the financial service and insurance sector practice. But I also have an international role, and in that international role is being co-responsible for a few of our business lines, being financial services regulatory, insurance regulatory, and the client group market infrastructure and regulated fintech clients. And that brings me to Money 2020 today. We see open banking as a new feature. Of course, we all know that there's already a certain extent of open banking. We already have had the PSD2 wave, as we call it, where payments became more accessible, could be offered by a number of new market entrants by fintechs. So we've seen a lot of development in the payment space, payments being embedded in other products and offerings. But with the open banking wave that's coming now, we will see quite a lot of new areas of open banking. We will see innovation in insurance. We will see innovation in investment services, innovation in finance. And that will certainly bring new products to the market, new market entrants again, probably enhancing the customer journey of the clients, both clients of the banks, because also the banks can offer new products, but certainly also the product offerings of new market entrants will also be hopefully quite spectacular, as we've seen with the opening up of the payment space. So we expect a better customer journey, a more enhanced customer journey, more focus on customer data. That data will again also allow financial institutions and the players in the market to kind of develop their offering, make it better fit to their audience. Most likely we'll also see a significant increase in competition, because it will not only be the banks offering this type of products, but also other players, again, by embedding it in their services offering, like technology companies, like telecom companies, others. So enhanced competition in the market, all to the better probably. Both banks and fintechs, they will have an opportunity to access new revenue streams. They will, if they do the job well, and if they embrace the open banking environment, they will be able to create new customer journeys, create more customer engagements, create more loyalty, most likely, while they should not forget, of course, the fact that open banking and technology comes with a certain increase of risk related to technology, related to data sharing, related to data privacy. Cybersecurity is also sometimes an issue. So there are certainly things to be aware of. And of course, all of that within a regulatory landscape you have to comply with, and which makes it sometimes challenging to match the new open banking world with the regulatory environment everyone is navigating in. So that's a bit how I see things now. Well, if you talk about the M&A market, we certainly see an increase in activity. So that's for sure. I think it's becoming more and more important to have size. You need size to be able to earn back your investments. You also have a big compliance cost nowadays, big regulatory costs. So size really starts to matter also in the financial services industry. As a consequence of that, as you already pointed out, we see an increase in M&A activity. We see a possible increase in even IPO activity. There's likely some financial services and fintech players considering IPO in the next year or so. But if it comes to partnerships and your question, which is more the combination of an existing bank or established financial player with another party in the market, which can be a fintech, which can be a telecom, which can be a big technology player, whatever it is, they create joint ventures. We see a significant increase in the number of joint ventures in the market, where they try to put a new company in the market in which they pool a certain new business line that that combines the strengths of both the classic banking player and the more innovative partner. It's really important there. And what are the challenges that before doing that, you look after having a strategic fit. You need a strategic fit with your partner. The offering needs to seamlessly fit within the offering and the distribution chain of the bank and the partner. Regulatory alignment again is also extremely important in that space, because regulation, if you deal with banks, it's always behind the corner. Technology integration is an important point of attention. Financial resilience of the partner, and also to a lesser extent maybe the cultural compatibility of the GV partners. Yeah, we see a number of issues. Certainly, if you have discussions with regulators, if clients want to put new offerings on the market, the tokenized offerings. First one is, as you mentioned, security classification. So it comes down to what regulatory environment the token is part of. A token usually can be a financial instrument, and then all the rules around financial instruments like MiFID apply. It can be a payment token. It can be an ART. So there's a number of classifications that are possible there, and each classification has a different regulatory regime, has a different consequence when offering those tokens. So it's extremely important when offering tokens on the market or distributing tokens on the market that classification exercise is done. Another issue when offering tokens is what about the ownership? Who is the owner? Because it's not always said that the party buying the token is really, from a legal perspective, the owner of the token. And also with respect to tokens, there's custody change of tokens. The question is who holds the real ownership of the tokens. That's something to be looked into quite carefully, certainly for regulated financial institutions, because they're often asked by regulators to kind of tell them how it works with the ownership chain of tokens, also because of investor protection. Generally speaking, tokens are sometimes protected against insolvency, although sometimes not. So it's and the insolvency regime applicable to tokens, and also the insolvency regime applicable to the custodian holding the tokens on behalf of the clients is quite different, depending again on the nature and classification of the token. So that also nicely fits into that topic. And then finally, when tokenizing, it's still an extremely difficult world. It's a global world, because tokens, you can move them across regions quite quickly, across countries quite quickly, but the legislation in the jurisdictions worldwide is with some jurisdictions it's quite stringent. Other jurisdictions are quite lenient regulation. Others are still in the process of adopting legislation. Some have none. So navigating that field is extremely difficult in a global offering that most of those parties who offer tokens are navigating. That's a difficult question at this moment. It's still a huge divergence in regulation across regions. As I said already, there's technology is extremely important in light of that infrastructure, what technology is being used. Some countries have more open frameworks towards interoperability. Other countries have a more closed environment. So it's a bit difficult for the moment to see where that's heading.